Okay, everybody, this is Jose here. How are you, my friends? A little tiny delay starting the session today, but I believe it's all ready to get started. Cool. So please, could you guys please confirm with a quick message on the comments box that you hear my voice? That would be great. So that would be the final confirmation I need to begin the session. Just give us a quick hello, how are you, something like that. So that way I know that you hear me and we are ready to get started. Perfect. Very good. Perfect. Very good to see some of you that you are joining us in a regular basis, and also very nice to see the new members that you guys are joining us since only a few sessions. Okay, very nice. Cool. So anyway, let's begin today. Market is opening in 27 minutes. Okay, and the idea is to be ready to execute a collection of trades. Okay, so welcome to the session, 1st of May 2019. Today we are getting together for longer term trading. So as we always do, options is going to be an important instrument for us to plan different types of trades. But before we start, disclaimer, let's see how quick I can do it this time. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good. Perfect. So here is TradeStation. And also the way I would like to start the day today, I believe, similar to how we started the day the last Thursday, is with an email. Also coming from Supply and Demand Trader, which I believe I see with us today. Yes. How are you, Supply and Demand Trader? I love it. I love what you're doing, my friend. And let me before we go into the email. I mean, I'll put it here on the screen so you guys can start reading. But the reason why I'm bringing this email as we start the session is because, as you may have noticed, every time I am exposing you to certain trades, certain methods on how to trade, certain ways on how to use the UFOs, etc., many times I'll add comments related to trading psychology, managing emotions. We cannot detach, a trading methodology from the fact that we are the ones clicking the button and we happen to be human. Okay, so one of the key ingredients, one of the key elements that we need to develop to become profitable consistently, to become professional in the marketplace, it's confidence. Okay, and confidence cannot be bought, cannot be found in a drawer. Confidence is something that comes through practice. Practice builds experience, and if the experience is satisfactory, that experience is building confidence. And next thing you know, things become effortless because you have that confidence. Okay, but nothing never happens unless you get to that point. So again, many times, like today, I'll be planning certain trades for you. Some of you will choose to execute them. Some of you will choose to not to execute them. Some of you will choose to trade them with real money or paper money, big size or small size. And of course, all of this is fair. That is your decision, of course. But at the same time, there is no way you can build that level of confidence, without practicing. But at the same time, that first step, that first trade that you execute, that's the toughest one, right? That first step, because at the first time you do it, you have confidence on nothing. Right? You may have never traded before. You may have never used the UFOs before. You may have never used TradeStation or TradingView before, and that first time is always the toughest one. So emails like the one I would like to start the day today. It's are very powerful emails. For you to see what other members, what other UFO traders are doing, and therefore understand what you could be doing yourself as well. Okay, so little motivational piece, if you wish, when it comes to bringing a little bit of confidence into what you do, even though in the case of some of you, you are in the beginning stages of your learning curve, okay, where others, okay, we are a mixed group, others you are very experienced and confidence is not a problem. But again, everybody's in a different place, and I believe that this email, in one hand, makes us very proud. This email serves to Supply and Demand Trader as an accountability tool where he keeps reporting back to us on how is he doing. and that helps him to remain disciplined and diligent on how to execute himself. But at the same time, this email hopefully is inspirational in a way where, if some of the trades I plan today, you feel that, I'm not sure, I never did an iron condor before, I never did a credit spread before, whatever, well, you can still execute that trade in a paper money account, practice, and start building that practice that produces experience. Then you get those satisfactory results, and next thing you know, now you're building confidence, which will allow you sometime in the future to execute with the size you want to reach your goals. Okay, so anyway, very, very important to understand the psychological impact of trading and what we do or what we don't do in order to build a skill. Okay, and that's why I love these emails. Okay, so congratulations, by the way, Supply and Demand Trader, when it comes to just being professional, just that simple. Okay, very, very simple. So anyway, I think that while I was explaining all of this, probably you guys had the opportunity to read this email, okay? By the way, talking about the Tesla trade, okay, which is one of the trades that expired last week with a full profit, well, you may remember we planned on another one, okay? We plan on another one. And the other one we plan, that one is a little challenging, isn't it? If some of you are in this trade, which I know some of you are, we took the trade. Let me zoom in. We took the trade, on this particular day, which is the day where we have this. Give me a second here. Here we go. So that we have this vertical line here. So somewhere, within this candle, we took the trade, and the expectation was that Tesla will not reach the upper part anytime soon, and Tesla will not reach the bottom part anytime soon. Okay, but the reality is that Tesla actually surpassed the bottom part by a little bit, as you can see. Okay, so challenge, the current price of Tesla is down here, even though it seems that Tesla will open 0.19 up, and this is, a trade running on using May 3, so we, we are 2 days, let's call it 3 days away from that expiration date. Okay, so this trade could certainly end up as a profit, but at the same time, the fact that it went beyond this bottom blue line, is probably feeling a little challenging. Okay, so we'll get back into sharpening sessions sometime in the future, and we will be also talking about what can you do in situations like that. Okay, because one very, very, very basic way on how to deal with this trade is to use a stop. And that's it. But we also know, and we talked about it a few times, that many times certain stocks have a level of liquidity where it's not amazing, and therefore the difference between the bid price and the ask price is quite wide, and if you were to use a stop, you just guaranteed yourself to get hurt badly on the spread, and the bid-ask spread. And therefore, one way to deal with these condors is to do nothing, because you have a predefined risk already. Even though we will learn that we can actually do something, which basically will be dealing with spreads against the iron condor, and by combining certain spreads against the iron condor, you'll be able to offset some of those problems when a market is really moving way faster than expected, like it happened with Tesla in this particular case. Okay, so we'll do that in some of those weekend sessions that we call sharpening. And this will be a few weeks from now, okay? But in any case, I wanted to show you that in one hand, this is the product of the work well done. So again, one more time, congratulations. And this is teamwork, so I'm expecting all of you to be ready to execute those trades. And if you don't feel comfortable, please use a paper money account. But at the same time, let's work together on this so you can develop your skill. You give yourself the opportunity, right? While in the other hand, I will say that even though in this case we have a fantastic email with fantastic results where all the trades are profitable, well, it's not always like that, okay? And sometimes we'll take losses. Sometimes we'll offset those trades with certain techniques that we'll explore where you diminish the size of the loss and things like that, or you end up with a very small profit instead of a normal profit, but at least, you kind of, add a little bit of, fixing to the problem you had when the market moved too far against you, okay? So we'll be talking about all of this, sometime in the future, okay? But anyway, so back to the charts here, back to our trade station, and let's begin our day planning trades. Well, I see a bunch of comments on the comments box. I don't want to miss anything, so let me read these very quickly. Many of the text are good mornings. Say very good. Live life strong. Thank you, Jose, for what you're doing. I'm learning options first time through you. Amazing explanation. I'm glad I found this YouTube channel. My pleasure, my friend. My pleasure. And you guys, as I said, it's my huge pleasure to be here for you, and it makes my day when I see you following what we do and get the results. Okay, so teamwork. Okay, one more time. Dear, got stopped out of the Tesla trade, had my stops right before the short leg. Got it. So again, with Tesla, it's not, how do I put it? It's not a crazy idea to use stops in the sense that the level of liquidity in Tesla, it's more or less okay, but it's not super amazing. Okay, so I guess, Dirk, that in that stop out, probably you suffered a little slippage, and probably not a big deal. It's part of trading, and we'll find other trades that are profitable. At the same time, again, keep that in mind with stocks when you do iron condors or non-directional trades in general, with trades that are, with stocks that are not super liquid. Okay, we'll talk about other ways to deal with it, because stop. If you think about it, a stop order is a market order, and a market order will take whatever price available. Therefore, you are guaranteed to suffer the whole spread. If you do this with the S&P 500, like such as the ETF SPY, markets like that are super liquid, then it's fine. Okay, but when you start getting into stocks that got more volatility built in, higher price points like Tesla, not my best, not my favorite choice. Okay, so we'll talk about that. Hey, Bobby, how are you? Very nice to see you here, Bobby. Supply and demand trader, thanks for the mentoring. Thanks you, my friend. Thanks for sharing those emails, because to be honest, as I said, it makes our day, but it's also helping many other traders in our community that are with us today. Okay, so thank you, supply and demand trader. Okay, and everybody, I would say, please give a big thank you to supply and demand trader as well. Derek, Jose, a quick question, please. What is the neutral long credit scan for? Okay, good. So basically, we did talk about all of this in those sharpening sessions. Okay, but since I am about to plan the trades, I think it's a good question and a good opportunity for me to review very quickly what is directional long and short trades, what is neutral long and short trades, and what is non-directional trades. Okay, so starting from the top, okay, directionally long or directionally short trades, I think it's kind of self-explanatory. So we are talking about markets that are trending in a particular direction quite strongly. That's how the filter has been set up, isn't it? How the scanner has been set up. So we are identifying stocks that are in a strong trend, okay? And for example, Chipotle Mexican Group, okay? So very powerful trend to the upside, right? And therefore, there may be a potential opportunity to join the uptrend to the long side, and then we'll analyze if that's the case or not. But basically, what the scanner is trying to do is pick up stocks that are strongly trending up or strongly trending down. Okay, for example, Merck. Okay, so let's see what's happening. It's pushing down very heavily, so that's a downtrend. Okay, impulse correction. The impulse is clearly to the downside. So again, directionally long and short, I believe, is pretty clear. Now, to go to the next extreme, I'll go to non-directional. Okay, non-directional means that stock may be trending, maybe not trending, but whatever it's doing is not too strong. Okay, so as you can see, Caterpillar, for example, it's kind of sideways. Okay, and maybe some of the stocks in this list. Okay, let's try CVS to see. For example, that stock, it's certainly moving sideways in recent times. You may see it going down, but the fact that now it's kind of going sideways, so maybe a downtrend, but not a strong one. Does that make sense? So non-directional trades means that there is not a clear direction in the market, where directional means that there is a clear and strong direction in the market. So what is neutral? What is neutral long and short? Where neutral long and short means that there is a direction in the market. For example, let's take a look at Cisco, for example. So there is a direction, which seems to be up, right? But even though it's moving up, what the scanner has identified is that the energy that this trend is showing the speed of movement. When I talk about this impulse correction, so this type of market movement is not strong. So if you were to compare the stocks that we have in the directionally long, such as IBM, for example, and you were to compare that with the neutral long, such as Cisco, I don't know, whatever, let's pick another one, Baidu, for example. So when you compare that, okay, the difference is the strength. So both directionally long and neutral long are stocks in an uptrend or beginning an uptrend or showing signs of an uptrend. But the difference between the ones that are in the upper section directional versus the one that are in the bottom section neutral is that the strength of the trend is totally different. Okay, the strength of the trend in the neutral stocks is weak, where the strength of the trend in the directional results is strong. Okay, so when a trend is not strong, well, it may tend to last less, it may move slowly, it may get to your target, but it takes an eternity. And as you know, options have decay. It has time decay built in, and therefore, it will be problematic to get into a trade where the market is moving very, very slow. So the neutral trades have a little bit of a directional component, but because the strength of the trend is not too strong, then normally what we do is that we play those market opportunities with credit strategy, hence the C, where we sell options, okay, and we don't need to bet on where that market is going to go. We're just going to bet on where that market is not going based on the UFOs and the current trend condition, even though we know the trend is not strong. That's why we are not betting on where it's going, because the trend is not strong. Where with the directional stocks, the trend is strong, so then we're going to use debit strategies, okay, hence the D. Sorry, guys, I just hit on the wrong button here. Hence the D, and the D is for debit, meaning that now we're going to buy options. Of course, we're going to suffer the decay, but at the same time, because the trend is strong, and then we're going to look at the UFOs and everything, so we're going to end up with market opportunities where those stocks are likely going to move towards the targets at the speed of the light, and therefore time decay will not be a problem. On top of that, we have a way on how to use expiration dates to minimize this problem, and that's what neutral long and neutral short means. Basically, it's markets that are moving in a certain direction, but because there is not much energy into it, we don't want to play the move. We rather play where the market is not going instead of where the market is going, and therefore we do it in the form of credit spreads. When the market is totally undefined, in the sense that there is no strength to the upside and there is no strength to the downside and there is no direction to the upside and there is no direction to the downside, then basically what we do is that we do credit strategy above and below. We do a pure non-directional trade, for example, Celgene. Let me see how the market looks like. So as you can see, it's kind of congesting, not doing much, going sideways, so nothing clearly clear is happening on that stock. So then later we go ahead and we analyze those UFOs and we conclude if we have a trade or not. But the idea would be to exploit a market condition where not much is likely to happen when it comes to price movement based on the current parameters of that stock before we look at the UFOs. Okay, so that's a summary of things that we covered during the Sundays. Okay, Live Life Strong, Jose, can you please click on each scan settings? Well, if that's okay, I would rather not do that because that would consume a lot of our time today, and today is not a sharpening day, it's a trading day. So what I would suggest though, for everybody, including you, Live Strong, please send us an email to reach@tradewithufos.com, and then we will email you back the scans. Okay, we'll send you a backup file with TradeStation that you could import, and automatically you get the scans in your computer the way I have them myself, so you can look at the settings and you can even change them if you choose to. But you get to have the same settings I have, and we don't need to go over 5 different screenshots and everything. Okay, so we can do it this way. I think it would be much better. Okay. Cool. Very good. Wonderful, guys. Okay, so let's begin trading, guys. So anyway, so let's begin with directionally long. So we have 3 stocks that potentially are candidates for a trade, betting on a move to the upside. The first one is Chipotle Mexican Grill. I don't know why I always, instead of grid, call it group. You may have heard me say that before, but anyway, it just doesn't stick for me. Anyway, we're gonna discard that trade though, because look at what's happening here. We are actually right in the red. So yeah, even though we're in an uptrend, we are actually inside of a red UFO in the daily time frame. So these markets may be more prone to go down than going up, at least until those unfilled orders get filled, okay? Those red unfilled orders. So let's move to DHI. And DHI does allow us for a little bit of movement to the upside, okay? I'm not super in love in the sense that there is a red UFO there. Let's call it a little close. But at least there is some white space from current price to where the red UFO is. So I'll come back in just a minute. I'm going to check on IBM first, and depending on what I have with IBM, if IBM gives me a better setup, then I'll plan a trade on IBM. If not, I'll come back to DHI to see if we have a trade or not. So IBM, let me see. IBM is looking way better. So I guess you are with me on that. The red UFO is super far away. This market is in an uptrend, is identified by the scanner. The options are very low price, identified by the scanner as well. On top of that, we have a little bonus here, which is the fact that a green UFO just formed in the daily time frame. Okay, so it's pretty cool. So what are we gonna do? Well, just to have a little bit of an extra confirmation, I would like to drop to the 60-minute time frames to see what do we have there. Okay, and we have a UFO here. 49.51% is the performance in this time frame. I would like to check pre and post market data to see how IBM is traded pre and post market. Let's see, we got more than 49. We actually got 52. So the unfilled orders added pre and post market for IBM is not the case for all stocks, but in the case of IBM are the most significant. Okay, so what I'm going to do is I would like to place a little line here. The top of this green box is 139.5. Okay, so I just added a blue line. Sorry, I made it yellow. Let's make it blue at 139.5. Okay, and that's because I have this beautiful green UFO very close to current price. So we're talking about $1 away. Current price is 140.42. And we got unfilled orders at 139.5. So if I go back to the daily time frame, okay, it's pretty nice because we have this green UFO from the 60-minute time frame pre-market data lining up with the green UFO from the daily time frame. So this seems to me like a very, very powerful entry point for a target located around the 152.8 area, which is the bottom part of this UFO, okay, the red one. Okay, so let's plan on a trade here. Timing wise, when it comes to entries and exits, we are talking about final target. Okay, final target for this trade located at 152.8. We are talking about an entry, long entry, located at 139.5. That one is the ideal one, but if you cannot wait, you can just enter anytime. Okay, and the reason why I am kind of proposing to enter anytime, even though I haven't done the math properly yet, which I'm going to do in a minute, it's because it seems to me that there is a great amount of room, a great amount of space between the current price until the red UFO. And therefore, even if instead of entering at 139.5, you enter $1 above, which is 140.5 or something like that, well, you still get a pretty good entry price given the amount of potential for movement, given on the amount of white space before you reach the red UFO. And therefore, it would not be a crazy thing that you take the trade, because sometimes, what happens, like for example, notice what happens here in this green UFO below. Or that one here too, right? So, you could have said, if none of these, okay, if none of these things have happened, okay, let's pretend none of this has happened yet, okay, and you have a green UFO, okay, and we are that day, right? We are that day. Well, if you didn't take the trade that day, you would have missed all this move because the market never came back to where the green UFO is, even though it was quite close. So today we're going to have that market open at 140.35, which is going to be right a little above yesterday close. And you know what? Yeah, it's very close, and it may come back to 139.5, which is the ideal entry. It's the proper one. But the risk of waiting for that amazing entry is that it may not come back. And then if this move does happen and reach our target before it falls, the reality is that you missed it. Okay, so again, for some of you that you may be more in the eager side of taking this trade. And when I say eager, please don't get me wrong. I'm not saying that we improvise here. Everything is pre-planned. When I mean eager size is that maybe you have a bunch of short trades in your portfolio, and maybe you want to offset a little bit of short with adding some longs. You probably be aware that the S&P it's making all-time highs, testing all-time highs, and if we got a huge breakout, that thing is gonna go, or is likely to go. And if you were to have too many short positions in your portfolio and you have nothing long to offset it, that would be a problem. So that's what I mean by being eager to enter longs. Okay, again, it's all pre-planned. Nothing is improvised. Okay. Mario, I was should we put a safety target at 147 as per the red UFO on the 60-minute chart? I would not, Mario. That's a good point. It makes a lot of sense, but at the same time, we are relying on a daily trend. And again, the scanner has identified the trend is actually strong. Impulses are to the upside. The movement to the downside is just corrections. All of this is identified by the scanner. So could you be a little more in the careful side and do that? Yes, but you may cap a lot of the profit that you may make on this trade. And, it would be a little bit of a shame if you wish, right? So in this case, we're talking about a trade for you to stay for a little longer, okay? So, it's today is a longer term trade, okay? So what you said would make a lot of sense to me if we were doing an intraday day, but when you are doing a little bit more longer stuff, I would say it's better that you go for your ultimate target. Okay, someday in the future as well, we'll need to talk about gamma. Okay, and what I will propose, Mario, following your suggestion and question, is maybe to do some gamma offset at that point at 147, which is kind of a dynamic way on how to scale out without scaling out. And again, we'll talk about that in the future because we haven't covered the Greeks properly yet. And we need to do that first so we speak the same language, okay? But anyway, so let's say the market is going to open in 1 minute from now, and let's say we're going to get into this trade. So, what are we going to do? Well, if you were to go back to our notes, right, from the prior sessions, okay, we're going to do a bull call spread. That's what we're going to do, okay? We're going to do a bull call spread. And to do a bull call spread, we will need to sell a call, okay, beyond the location for the target, okay, and we would buy a call, somewhere around the midpoint between the current price and the target, okay, which we're going to calculate all of this in a minute. And then we need to be very thorough as well with the expiration date that we're going to use, okay? So we need to be very careful about the expiration date, and that expiration date depends on the TTT, but also depends on the earnings for that, the earning date for that particular stock. So we need to look at all those little things to be able to plan the trade properly, okay? So let's do it. This is going to take very little time. So the market just opened, by the way. So I'm going to load my option chain. I will also, while I'm loading the option chain, I will get into briefing.com and type IBM to check on that earnings date, which is happening July 17, as you can see here. Okay, so July 17, keep this date in your mind. Loading the option chain on my other computer screen, which I'm going to bring it into the one screen I'm sharing in just a second. Okay, very good. Okay, so TradeStation is doing the loading process for the option chain. Here we go. So we're going to change Tesla for IBM. I got it, so it's loading here. So while this is loading, let's calculate the TTT, okay, time to target. Again, if you're not familiar with the calculation, you need to review the sharpening sessions that we did for options, okay, but basically this is the formula. room for movement divided by the ATR times 7. Okay, and again, I don't have time to really repeat why it's like that because I would spend too much time and it's recorded, even though, remember, on May 11, we're going to do a huge Q&A session. So if you have questions about some of the things that we do, make sure you are available that day so we can interact live. And if not, you can always send your questions via email too. Anyway, so TTT. So the target we say is going to be 152.8. The entry price, let's say you enter now, is 140.49. Okay, which is current price. So we are talking about $12.31. That's the room for movement. If I was to look at the ATR, average true range, we're talking about $1.95 per day. This is how much IBM tends to move. So if I divide this by 1.95, it's giving me 6.3 weeks times 7 to make it days. It's going to be 44 days. Okay, so 44 days, it's the TTT. Okay, I have a TTT of 44 days. Now, does it mean that I need 44 days? No, it means that I need at least 44 days. If it's more, it's fine. But I want these 44 days, okay, to be the minimum parameter, because what I really want is I want, my expiration date to be the nearest to the earnings report date, which we said is July 17, as I just typed. So if I look at July 17 on the option chain, the closer I have is July 19, and that gives me 79 days, which is certainly more than 44, so I am very happy. Okay, that's what we need. We're going to use July 19, 2019. That is going to be the expiration date. Okay, 19 July 2019. That is going to be the expiration date that we're going to use in this trade. And when it comes to the specific strike prices, so it's looking like it's going to be the 140 call. Well, maybe not. We'll see that in a minute. Let's take a look at the option chain here. So we have 140, 145, 150. Okay, 140, 145, 150, 155. Okay, so certainly the one that we're going to sell is going to be the 155 because we need it to be further away beyond the target, which the target we selected it as 152.80. So we're going to pick 155 as the strike further away. Okay, and you may remember the notes here, very quick, as a quick reminder here. So buy and sell a call. The call you sold is beyond the target. The target is 152.8. So we pick the 155. It's quite simple. Okay. And then for the one that we're going to buy, you could certainly go for 140, but I also want to give myself the opportunity to lower my cost by looking at the midpoint between the current price and my target, which is 146, okay? And the nearest one I'm going to find in the option chain is the 145, right? We don't have the 146, but I have the 145. So instead of 140, I'll do 145, 155. So if I do 145, 155, let's simulate this trade. Analyze by a vertical spread. Okay, so I am buying the 145 and selling the 155 call. And I know I'm moving at a decent pace here because obviously it's a trading day. So take a look at the data that we get here when it comes to last, okay? The current price of that stock is 140.38, and when you look at the delta, it's giving you a delta of 24.55, okay? So normally you would want the delta to be a little better than that. So what if I was to do 160, which is the next strike? If I do 160, my delta becomes 30. Okay, so now I am a little happier than before. So in the end, by doing this little adjustment, I got my delta to where I want it, which is around 30. And therefore, instead of the setup I thought would work, which was 155, 145, it would work better if I was to do 145, 160. Okay, so that would be the trade. And again, as I said, now you have two ways to execute this trade. Wait for price to come down, okay? And the moment IBM drops to 139.5, buy the spread, okay? And ride the move, and when it gets to your target, sell the spread and you made a profit, okay? But remember, this drop in price coming back to 139.5 may or may not happen. So another way to execute this trade is just take the trade now at the current price, which is 140.53. Okay, you're gonna leave a little bit of money on the table, but you don't miss the trade. So depending on, what do you need in your accounts, you would take this trade or not. Now, another thing I need to say before I execute this trade myself is the management. So if you were to take this trade now, this trade would cost you $212. Okay, $212. That's what the trade is gonna cost you. And if that stock was to move to 152.80, okay, if that stock was to move to 182.80, it's looking like you're gonna make $500 on this trade. So you are using 210 to be precise to make 500 plus. Okay, it's a nice trade. Okay, it's an okay trade. That's why if you don't want to, you don't need to wait for a price to come back to 139.5, even though it would make it even better, right? But you don't need to. Okay, unless you want to be very conservative and you have nothing short in the account, you have nothing to worry about, etc., etc. Okay. So if you want to take this trade, you would have two ways on how to execute it. So execute the trade with an entry anytime or 139.5. I repeat myself one more time. Take the profit at 152.8, and then you could optionally, use an optional stop. Okay, located below this UFO. In other words, if this market comes to the UFO, you expect it to bounce up, but instead does something like that and finally goes through, okay, well then you would, one option would be to stop yourself out here, you get out of the trade, and of course you lose some money, but you would not lose the full $210, $216 that the trade is worth it now. You would lose less, okay? So that's one way to look at this trade, which is absolutely 100% valid. But you heard me say earlier that sometimes when using stops, you get slippage with options and so on. And, if you were to look at the 60-minute time frame, okay, notice how many green UFOs below price we have. Also, same thing happens in the daily time frame. You have, they are much further down, okay, but you also have multiple green UFOs. So yeah, in one hand, if this market goes down, it may go down and never come back. And if you don't use a stop and it never comes back, then you're gonna lose everything you pay for it, which is $216. And therefore, every time you take this trade per contract, your risk would be $216. If you were not to use stops, your risk is $216 per contract. So it's kind of like you have the stop built in, but instead of having the stop built in based on the price of IBM, you have the stop built in the price of the option because you cannot lose more than what you pay for the option. Is that making sense? So because of that characteristics of debit spreads, where the most you can lose is the debit paid, in this case is $216, you could choose as well to not to use stops and give that stock the opportunity that, let's say it was to fall or whatever, maybe now a new institution shows up, creates a new UFO that didn't exist before, and next thing you know, that thing now keeps going up, and reaches to your target. Now, if you had used a stop here, you would have taken only a tiny loss, but you would have missed on the profit, where if you didn't use stops, you are giving yourself time until July for something like that to happen. Even if it goes against you, in the end, it may get to your target. Okay? And especially if you have a diverse portfolio with multiple positions running at the same time, where some of your positions are short and others are long, so you may get to your short targets with some of the trades, and then this thing comes back and gets to your long targets, and that makes you a happy trader. Is that making sense? So the way I'm gonna propose, okay, or the way I'm gonna execute myself this trade is just by taking the trade now with no intention to use a stop because of what I said before. Okay, so I'm just gonna, and I'm just to get executed immediately. Don't do that yourself, please. Please go ahead and use limit. Maybe, natural price is 227, the mid price is 215. So maybe you go for 220 or something like that, and you get filled at a good price. In my case, just to get executed immediately with no waiting time, so I can do the management of this trade too. I'm just gonna go market. So market, place order, yes, 1, 2, 3. I just got filled on the trade, so I am in, right? And now, since I got filled on the trade, and notice how I am expanding these two legs, so I'm gonna drag the long into, not here, in the manage section. Here's my IBM, right? So what I'm gonna do is I'm gonna drag the single long on top of the single short, so now I got my vertical spread here, right? And what I want to do now is I'm gonna go ahead and place an order to close this trade. Okay, good till cancel, I'm gonna have an order, a market order to close this trade with an activation rule, which now, and I know I'm doing this very quickly, guys, and it's quite fast, but you can watch the recording later on because, we have limited time today and I wanna be efficient. But basically what I'm doing is I'm placing an activation rule, which is a special instruction where I'm going to tell TradeStation that if you ever reach 152.8 for IBM, greater than or equal, right? You see it here? So if you ever reach that figure or above, please go ahead and activate an order to close my IBM spread, okay? And the moment I place that order, nothing's going to happen. The only thing I will have is, in the background, this order will be alive, is GTC, which means good till cancel, and that means that order will stay there until that happens or will expire. That order will disappear on July 19 when the options expire. Okay, so I got a position, I purchased a bull call spread on IBM. We are now exposed to this trade, and so I'm just gonna have a vertical line there so we remember. As I always do, I'll take a screenshot of this and we can keep that chart for future reference. Okay, and basically, so we have this running in our account. We have also the closing order in case it gets to our target. So the system will take profits automatically for us. We're expecting around $500 of profit out of a $200+ investment. Okay, so basically like a 200% return on the investment, which is pretty cool. And we're in the trade. Okay. Now again, there are many other ways to manage this trade. Again, earlier I was talking about gamma. So this is a positive gamma position. This would allow you to do multiple other things, etc., etc. But we'll have to talk about that in other further sharpening sessions. So to keep it simple, you are in the trade. If you took it, of course, you are in the trade. If it goes against you, the most you can lose is what you pay for it. Mark is reporting got filled at 216. Supply and demand trader, you got filled at 219. So the most you have at risk is 219, 216, etc. That's it, right? And if it goes your way, you'll make 500. Additionally, you can use an optional stop if you wish, okay? And further in time, we'll go over other possibilities as well for more advanced management. Okay, that's the trade. Before I go for the next one, I would like to take a look at your comments and questions. Bojan, hi Jose, as a trader who has never traded options, do you go over the how-to with options in the sharpening sessions as in depth as with the sharpening intraday sessions? Yes, there are seven sharpening sessions for options, Bojan. It's quite intense, especially if you never traded options before, so make sure you get some coffee. Make sure you take it easy, and you may have to rewatch some of the videos. Because I do start very basic, but then it gets quite advanced. Okay, so take it easy, but it would be very powerful if you were to consume and watch those videos, and it would really, in my mind, it will really open your eyes to many things that could be done. Okay, and then of course, make sure you ask questions, and also everybody make sure you remember May 11 is going to be a special date where I'm going to be totally open for you to ask as many questions as you want related to whatever you need, okay? The only topic I'm going to put on the table for May 11 is that we need to talk about calibration because I want to help you take calibration to the next level. But apart from calibration, I'll be open to anything, okay? So we can talk about anything that you need or anything out of what I've been sharing with you in the sharpening sessions or trading sessions. Very good. So supply and demand trader, again, talking about diligence earlier. You look at that. You're in already. Mark, super good job as well. Way to go, Mario Jose. If we look for the following expiration, 20 September 19, with the idea of exiting before the announce, we can get a good delta with 145, 155, mid cost 243. Yeah, but you would have, Mario, I get your point, and that trade would be valid as well, but you would get a little bit lesser of an effect of the increase in value of the options as a consequence of earnings approaching. And that is powerful at times. And if you were to use September, you would miss on that. Okay, so my recommendation is to pick that July. It's going to make the trade to be a better one. Also, remember, we are dealing with stocks that are in an uptrend and is stronger. So things should happen quickly. And if they don't, then it's likely that will not happen anyway. So instead of 240, you pay 216. Is that making sense? So that's the idea. Okay, that's the idea. Even though I understand your point, what you said is correct too. If you want to give yourself a little extra time, etc., what you said is valid. Babu, until July 19, how can we monitor the progress of P&L? Very good, Babu. And by the way, I believe you had this question sent to us on an email. So you look with TradeStation. In my mind, the best way to understand your P&Ls for options is within the option tool. You have a tab called Manage, and to me, this is the best way to understand your P&Ls. Okay. Now, let me show you another way first, and then I'll come back to here, because also with the TradeStation platform, you have a tool called Trade Manager, which this is kind of like the raw tool on how to get access to orders and positions that you have in your account, so you know exactly what you have and you know exactly what you can do or what you cannot do. Okay. So first, let's differentiate between orders and positions. Those are two different things. Okay? Orders means you give an instruction to TradeStation where you want to buy or sell an option or futures or Forex or whatever, and it hasn't happened yet. That's an order. Position means that you gave an order and you got filled, and therefore you have something in your account that belongs to you. You are in a live trade, and that is called a position. Okay? So your question is, how can I monitor, what I have in my account? Well, one very, very kind of like raw way to do that is to come all the way to the right to the balances tab, where in the case of options, you will look at the equities or options tab. You will just move down, and here we tell you, what is your beginning date, account worth, what is the real time P&L that you have, the unrealized P&L today, the realized P&L today. So you will get some sort of some data that could be useful to you. But the problem of this is that all of this is kind of like an aggregate of everything. And to be honest, normally it's really not useful, especially if you trade options, because many of the options trades that we do, many of the options trades that we do are using multiple contracts at the same time. So for example, we just took a trade with IBM that uses two calls, one that you bought, one that you sold. So, sometimes you may see something red in your account, and it's because the other one is green, right? And it doesn't matter that it's red, because the net result is the sum of both options contracts in the account, not only one. Very good, Brian. Filled at 216. Good job. Secunda, why not save your live streaming? Well, it is saved. Let me show you the playlist in a minute, Secunda, if you don't mind. Let me finish this question first, and then I will show you. It is all recorded, all archived, okay? So you can watch the whole thing. So then to be able to understand, so for example, we just took a trade with IBM, right? So you could get into the positions tab, double click on the symbol header. So all of these get sorted by symbol, and now you can see the 145 call that we bought here and the 160 call that we sold here. Okay, +1, -1, both sold. You can see the average price, and then you can come in here and format the columns, and you can add things such as, let me see, open P&L, let me see, because there are many P&Ls. I just want to make sure I use the right one. This is the closed one, and this is the open P&L. Yeah, I would say this should be the one, and if not, it's going to be another one. But you can add a column with the open P&L here, and now next thing you know, you can see that with the IBM, one of the options is losing $10 for us, the other one is losing $4 for us. Okay, why? Well, first of all, because I entered the spread at market price, so I suffered the whole spread. You guys got a much better price than me because you guys went with a limit order instead of market order that I did. In my case, I got 244 minus 15. How much is that? So 244 minus 15. That is 229. So I pay 229. You guys are paying 220, 216, 221. So you got a better price than me. So you're gonna have less red than me. Okay. And when IBM starts moving, what you will see is that the long one will start flashing green, and the short one will start flashing red, right? And the net result of those two figures, okay, the net result of those two figures will give you the real-time P&L, and then you will know. But again, that is not my favorite way on how to observe the P&L in your account, Babu, because you need to look at multiple rows in this table, and then you need to do the sum yourself, either manually or in your head, and it's not very, very convenient. Okay, so my favorite way on how to monitor my positions here, my favorite way on how to monitor the positions is, as I was saying before, using the options tool. Okay, the options tool as well has on the upper part an order section. Okay, order section, and on the bottom part a position section. So the same two things I was showing you earlier, orders and positions, you can see it within this tool, which is Option Station Pro, which is the tool that we use to do our options analysis, look at the options chain, etc. The only difference is that now I am clicking on the Manage tab. So if I click on the Manage tab again, now I get access to orders and positions. Okay, and by the way, because I am executing in a simulated account, it's not ideal because I don't know if you know this or not, but with IBM, with TradeStation, in a simulated account for options, okay, not for futures or stocks, but for options, you only get filled if you execute at market price. And there have been many, many trades here, like Tesla, KR, XRX, many trades that I have here. Let me do a little bit of cleaning, because all those trades have not been executed, and the reason why is because they have not been executed because those trades were placed, as you can see below, with a limit order. Okay, and remember, I just told you that with a simulated account, I'm using a simulated account here, as you can see. With a simulated account, TradeStation does not execute options trades. It needs to be market. Okay, so what's happening here on my screen, and I would like you, please, guys, to ignore it, because in yours it's not going to look like that. I have a collection under received. I have so many orders that should not be there. The only one that should be there is the IBM order, which this order with IBM, okay, this one with IBM here, that order really is a closing order. Okay, remember, it's a market order where, if I was to click on the three little dots and I was to cancel replace, okay, I cannot edit, okay, but notice how the activation rule is marked, which means that I have an activation rule in place, and in this case, the activation rule is for me to close the spread, the bull call spread, if IBM was to reach 152.8, which was the target that we set earlier when we planned the trade. Okay, so coming back to your question, Babu, I'm giving you a little bit of a long explanation here so you understand the whole environment. So you have the receive and the field. So please ignore the receive, because on your side it's going to look different. The field will look the same. So I just got filled today on a bull call spread, and it's telling me, hey, you got filled. Okay, and you can see the trade here. So those are the orders that I got filled. And then to answer your question, for you to be able to see the result of your trade, you will want to look at below under positions. And the beauty under positions is that you could actually play with how you want this to be displayed. Normally if you executed a vertical spread, it will show it to you as a vertical spread, but you can also detach those legs if you wanted to look at the P&L per leg and stuff like that. Even though really the most convenient way to observe it is to just contract it the way it comes by default. And now I can look at this and you can see that as we speak, the real-time P&L of this trade, okay, the real-time P&L of this trade is 21 negative, okay, and the cost of the trade, as I did the math earlier manually, was 229. So you can see it here, super simple. So for all the trades that you got in your portfolio, you would have it here. And then you also have the aggregate in the bottom part where you can see what is the net result of those trades. For example, we have this trade with KR that was not doing too well. Actually, the one with AMRN was doing worse than the one with KR. Those trades are running in my account in this case, okay? And remember, those are directional trades, just like the one we planned today. They are directional trades that moved against us for a while, but there's still plenty of time left until the expiration date, and there are other UFOs, and this thing may turn, go back to our target, and those $300 that are not looking too cool at the moment may end up converting themselves into profitable, right? But again, coming back to your question, Babu, that's the number you're looking for, and that's the place where you find it, okay? Good. So, what else? What else? Perfect. Okay, so Secunda. You were asking about where to find those videos. Okay, so if you get into the YouTube channel, so youtube.com/c/tradewithufos, everybody knows this, isn't it? So when you come into this YouTube channel, well, we are now live now because we are live now. By the way, as I always say, please go ahead and click on subscribe and click on the bell. If you have not done it yet, please do it. And if you're watching this recorded, do it too. That way we are connected more efficiently. But coming back to you, Secunda, here in the bottom part, you have the playlists. Okay, you have them here too. Okay, and the one you're looking for is the one here with get together sessions. Okay, so if you click view full playlist, you have all the sessions recorded. A few minutes after, when we finish today's session will also be here in this list. We archive everything. And you know, the sessions that you guys were talking about, the intraday sessions, okay, are here. Intraday 4, intraday 3, intraday 2. The ones I was talking about, you keep scrolling down. You have options 4, options 3, options 2, options 1. Okay, so, you know, please go ahead and watch those sessions. As you can see, they are 2 hours plus each. Okay, and there is a lot of content. Okay, so you can certainly go ahead and watch that yourself. Okay, cool. More stuff. Any questions today, guys? What is the trigger type? Yeah, that is in case you want to route your orders directly into certain exchange. So there are some different triggers on how you can route your orders, Orlando. Normally, in my experience, it's always better to allow the algo to do the routing for you instead of you picking an exchange manually, unless you have certain deal, which, by the way, in your case, it could be Orlando. You know, that you may have a deal with an exchange where they give you cheaper fees for execution or data feeds, and you want to route the orders to one exchange particularly, okay? Dirk, quick question again. What was the reason again we went out of the money with the long one and not the ITM? Yeah, it has to do with cost. It has to do with the gamma thing. It has to do with the increasing Vega as prices approaches that strike. You know, again, back to those sharpening sessions, Dirk. Unfortunately, I am diverting a lot today already. I need to go back into finding more trades for today. It's a trading day today. Please watch the sharpening sessions. Yeah, great. Secunda, when will you cancel a plan? Never. Yeah, no plan to cancel anything, okay? The only thing that may happen is that we may do a better session in the future, and maybe we delete a session from the past because we believe the new one is better. That's all, okay? Good. So anyway, so let's keep going. So what about shorts? Do we have anything short? So let me see. BMY, no UFOs, HLF, little far from the red. Merck, I'm just looking for a more powerful setup. Merck could be quite interesting actually for a short. I'll come back to Merck in a minute. Pfizer looking good as well. Philip Morris, less room for movement. Tiva, less room for movement. UNH is looking quite good actually. Quite good. So let me take a look at UNH, Merck, and Pfizer when it comes to earnings to see what we have. So UNH, July 16, okay. Pfizer, no data, so I'm a little blind here with Pfizer. And what about Merck? M or K? A little blind. Okay, so because I don't have the earnings date yet, I mean, it shows us 30th of July, but I guess it's approximate, and that should be good enough, to be honest. But I'm going to go for UNH, since UNH seems to show lots of room to get to that 193 green UFO. There is not much to stop it, and strong downtrend, etc., etc. Okay, so let's plan on a trade with UNH, and this would be a trade. This would be a trade for us to execute as a bear put spread. This would be done by buying. Okay, we would buy a put anywhere between the entry and the target price, and the target price would be the place where we would sell a put, which is actually beyond the target price. Okay, so we need to look at the expiration date, we need to look at the TTT, and we need to look at the earnings as well. Okay, we need to look at the three. So let's begin with the TTT. So for the TTT, we're just going to grab a calculator. We're going to look at the current price, 232.87. We're going to look at the target price, which, by the way, I didn't type what the target would be. So the target would be the top of this box, which is 193.32. Okay, so short entry, and then final target 193.32. That will be the one. Okay, so I want to see between 230, actually 233 now, 233.28 and 193.32 how much room there is. It's $39.96. Very nice room for profit. Okay, the ATR is $9.01, so that stock is moving very fast in current times. $9.01 is the ATR, so it may take 4 weeks to get 4 weeks to get there. Times 7, we're talking about 31 days. Okay, we are in front of a potentially 31-day trade. That's the estimation. Could be more, could be less, but that tells us, okay, that at least we need at least 31 days to expiration, and the earnings date is July 16, very similar to what we had before with IBM. It was July 17, now it's July 16. So when looking at the option chain for UNH, okay, I'm going to have to reboot that one because it didn't give me the header properly. So let me close it, save, and open again. Yeah, you're right. Altong earnings for Pfizer were April 20, which is quite recent. And because it's a little recent, sometimes they don't give you a precise final date for earnings. And I'm always a little skeptical when that happens, even though realistically we don't even need to be that precise. You can see that the TTT is 31, and in this case, I'm gonna use an expiration date, which is gonna be actually, we can go for September, or we can go for June. Okay, and in this case, it's looking like I'm gonna go for June, because if you think about the amount of time, well, September is like 3 times more time than June. I only need 31 days, so I'm just going to give myself 51. In a perfect world, I would have the July like I had with IBM, but in this case, we don't have it for UNH, so we will use June. Okay, so let me write it down. So 21st of June, that is going to be the choice. Expiration date is going to be 21st of June, 2019. Okay, and now we also need to decide on the put we're going to buy and the put we're going to sell. Well, since the target is 193, it seems that it would make sense to point at the 195 as a valid put to be sold. Sorry, the 190 as a valid put to be sold. Okay, because you want it to be beyond. In this case, beyond means below. Okay, so 190. The one we're going to buy, you could certainly buy the 233 or something close to 233, which is the current price, which is the at the money. But we also open ourselves to look at somewhere around the midpoint between the entry and the target, which is 193.32. Okay, and that's 213. So I'm gonna go for 215. Okay, 215. There is no 215, so 210, 220. So I'm gonna do 220. Okay, so we'll do 220. So I'm gonna buy the 220, okay, and sell the 190. And if I was to do that, well, now I'm gonna have to simulate to see if I get my 30 delta or I don't. Okay, so let's analyze buy a vertical. And I know we have surpassed 10 a.m. Eastern time by 7 minutes, so I'll conclude planning this trade and then we'll go, guys. So I am buying the 220 and selling the 190, and if I was to do that, notice how at current price last, okay, which is 233, at current price I get a delta of 20, which is not enough. So how do I fix that? Well, I need to push 190 further away to 185, to 180, to 160, to 155, to 145, to 135. I'm really not comfortable. Let me see what's happening. So when we get to, okay, yeah, that's why. Yeah, the amount of premium available with those strikes is so little that no matter how lower you go, and please don't get confused because lower in the world of options in the option chain means going up. Okay, so it's kind of backwards. So the lower you go, 190, 180, 170, those options are so cheap, plus the spread is so wide because no one is trading those options because they are so far away, that really I don't experience any change on the deltas the way I need. So this is going to force me to do something a little advanced here, and hopefully I'm not confusing too much, which is I'm going to go for September expiration date. Again, I would love to have July, but we already said it doesn't exist. So I'm going to go for September expiration date, and again go back to my 220, 190, but now I'm doing with September expiration, and when I check mark this one, I get my 20 delta, but what happens if I move down to 170, for example? Now I get 25. What if I get to 160? I get 26. What if I get to 140? I get 28. And that's the best it gets, okay? So am I loading all the strikes here? No, I'm only loading 40 strikes. So let me load them all. And I want to look at the option chain. This is a little bit of an advanced adjustment. Okay, so notice how when I kind of like below the 170s, I'm getting the same problem with the September that I was having with the June expiration. Okay, so that then if I cannot fix it by going down the ladder, it means I'm gonna have to go up the ladder, with the option I buy, kind of, just move everything up. Okay, so instead of 220, I'm going to start with 230. And therefore, maybe by moving the put I'm about to buy higher, then I'll get the deltas I need, okay? Because I don't have any other way on how to fix it, given that the option chain is showing lack of liquidity and price in those options, and therefore they are not providing the delta I need because they become so cheap that basically those options do nothing, okay? So if they do nothing, then I don't get the delta I want. So what am I gonna do? So come back to here, change my 220 and make it 230. The moment I do that, I got delta 37. Now I got more than 30. So let's go back to 170, for example. Still too much. Let's go back to 175, 33. One more, maybe 180, 185, 32. I'm shooting for around 30, 185. Okay, what about the 190 as we did before? Well, 190 is 29. Okay, so we'll do 185. That's it. So this one was a little more advanced than we would normally have in our hands. We had to do a little adjustment, but we have it now. Okay, so many changes here in this trade. Okay, so first. 1 second, as my keyboard is doing something. So first, we are not going to use June 21st. We are using September expiration. Second, we'll use 185 and 230 instead of 220, 190. Okay? That's the plan. That is the plan. So let me see if I have it right. 185, 230. Okay, got it. Perfect. So guys, a little time for a screenshot here. So if you guys want to take a screenshot, this is the time. Very good point, Brian. Very good point. We could certainly go back to recheck June. But my experience will tell me that probably we will end up wasting a little bit of our time. Or probably, even the 185 in June is going to be such a cheap option that is not going to help too much to do what we said the spreads do. Okay, so when we talked about credit spreads, we talked about there is an offsetting effect, to ignore underpricing on scenarios. So we talk about, why do we do spreads? Okay, we talked about that, and what just happened planning the trade, it's kind of showing me, this is out of experience, that the June probably will not work. And the reason why in the end is very simple. It's because of a good news. The target is very far away from the entry. Okay, and because the target is very far away from the entry, the option that we are using to sell, the 185 put that we used to sell, is far away. And because it's far away, by definition, it's going to be cheap. And therefore, it's not going to help to do what we want the spreads to do. Okay, which is what we covered on those sharpening sessions. So again, you may make it work with June, but probably the trade will be much better with September, precisely because the target is very far away. Okay, so quick instructions before we conclude the session today. Just like before, you can take a short entry now, or ideally, let's check the 60-minute time frame. So ideally, we have 54%. Okay, 54% with pre-post market. Regular session, it's 54 too. So okay, so we got more or less the same stats pre and post market or regular session for that particular stock. So if I was to use my line here in the very, very exact location where the UFO begins, so the perfect entry price for this trade, okay, and let's go back to the daily time frame, would be 237.03, 207.4, something like that. That would be the perfect entry price to buy this bear put spread. Okay, that would be the very, very, very perfect entry price. Having said that, as we said before, price may not get there. Remember, for you to get there, price needs to come here and then fall. And that may happen or may not happen, in the sense that price being here may start falling from here and never reached to 37.03. Okay, so you could take the trade now, or if you want to be a little more precise, okay, so short entry at 237.03 if you are very perfectionist, or anytime if you want to take the trade now. It's definitely valid in the sense that there is a lot of room for this to move. Out of just running an estimation, 193.32, if I enter that figure here, 193.32, okay, 32. So 190, okay, I'm having a little issue here. Okay, I got it now. So 193.32, if you look, we are looking at a P&L of $1,659, where this trade would cost you $1,000, and you're giving yourself time until September to get there. So this trade is a little less efficient than the other one because we're using a little bit of a longer expiration date, and therefore the cost is more. And if the cost is more, even though the profit is nice, then the rate of return, okay, the ROR, rate of return, is not as nice. Okay, why? Because we don't have the July expiration date, but we cannot control that. Okay, in a perfect world, we will have July. We don't have it. Okay, so this trade, to take this trade, you would use September, and you would be risking a maximum of $1,000. This is obviously a pricier stock. It's a $200+ stock, $200+ stock per share. So it's a pricier stock, and therefore the value of the options is also higher, and therefore the cost of the trade is more. So may or may not be suitable for your account or the amount of risk you want to take per trade. To some of you, taking $1,000 of risk may be too much, so please don't take the trade. To some of you, may be acceptable, so then you decide how many contracts. Okay. You can also execute this trade with a stop, and that will limit the risk. Okay, but remember, the beauty of not using a stop when doing bull call spreads is that if it was to go against you, okay, and then some institution shows up, forms a new UFO, and pushes the price down, and finally you get to your target, okay, well, you have never been stopped out above the UFO, and when price comes back down, well, you're still in business because you never got out, and you're giving yourself until September for this to happen. So again, not bad, especially if you do it in the context of a portfolio where some of your trades are long, some of your trades are short, and you have this, money-making machine, well adjusted, keeping you safe. Okay. But anyway, guys, today we didn't have time to look into credit trades since I have received, many questions coming from you, which I love, and I had to answer. So I only plan 2 trades, one with IBM, the other one with UNH. I would have loved to plan a few more, but that's what we have time for, and that's it. Okay, so you guys will have to do your homework on your own to look at the credit trades, the neutral long, neutral short, and the non-directionals. And definitely, if you have any question, we're here to help. So you can shoot an email to us, reach@tradewithufos.com. And it'll be great to receive your email and give you answers, okay? Before we go, guys, thumbs up. That would be appreciated. And we are not sharpening this weekend, as you guys probably remember. So this weekend is a little bit of a rest day. For some of you, maybe not. For some of you, catch-up day, watching sharpening sessions that you may missed. And we'll be back next Tuesday with the regular intraday trading, then Thursday with the longer term, and then we are in May 11 doing that very, very special session where I'm counting on all of you to attend, ideally live. It would be very, very important because we'll talk about calibration, which is critical, and then anything else after weeks and months of practice for some of you now. And I believe it's going to be such a powerful session, guys. So get your questions ready. Feel free to email them ahead of time if you want to. Let's get organized for that day. Let's make that day count. Okay? Anyway, super pleasure. Hopefully I didn't miss any question. Live life strong. Is there a way to place the option chain in ascending order? No, not in station. I always, to be honest, I always wondered about that. I got used with the years, and I really don't care anymore. But when I started learning options, in the prior decade, I remember that in my mind is like, why do you have the lower figures on the top and the greatest figures in the bottom? It never made sense to me, but then I got used to it, and it's natural to me now. But so I guess you'll have to get used to it, even though I know a few platforms do allow for that change. Let me see. Brian, Jose, since we're changing our entry strike, shouldn't we look back? Well, okay, I did answer that already. Brian Phil on UNH. You went for June to reduce costs. Great. If you got your delta, it's fine too. Email, yes, email is reach@tradewithufos.com. Okay, I just typed it in the comments box. Yeah, supply demand trader, loving these sessions, my friend. Loving that you love the sessions. Truly enjoying getting together and seeing your growth and your interaction, and I love it, guys, because we are really a team. Yeah, I think I didn't miss anything, guys. So I'll let you go, guys. Super pleasure. Looking forward to that next Tuesday. Have a good rest this weekend. Catch up if you have missed any of the recordings, and see you later. Yes, and Iftikhar, I can see focus on the FOMC today. So let's get some intraday trading going and take advantage of that too. You guys take care. Bye bye.